We're standing at the edge of one of the biggest financial stories of our lifetime. According to reports from Bloomberg, SpaceX is preparing to go public next year with a jaw-dropping $1.5 trillion valuation, aiming to raise $30 to $40 billion in cash. That wouldn't just be a big IPO, it would likely be the largest in history. Until now, the crown belonged to Saudi Aramco. Aramco went public at around a $1 trillion valuation and raised about $29 billion. But Aramco is a 100-year-old oil giant sitting on some of the largest proven reserves on the planet. SpaceX is nothing like that. It's a young technology company. It has revenue. It's profitable. It's growing fast. But it doesn't have the same hard asset base Aramco had. So how does it end up more valuable? The short answer: a plan to move artificial intelligence into space. Today, SpaceX is far more than a rocket company. It dominates launch. Roughly 90% of all payloads launched from the US are carried by SpaceX. Globally, its market share is around 80%. By landing and reusing rockets, it has slashed costs to levels traditional players couldn't even dream of. It also revived America's crewed access to the International Space Station. While Boeing struggled with its program and couldn't bring astronauts back safely, SpaceX stepped in, flew them, and returned them reliably. Financially, the numbers are already serious. For 2026, estimates point to around $24 billion in revenue. The company is cash flow positive, already profitable, and still privately held. Elon Musk remains the largest shareholder. If this IPO really happens at a $1.5 trillion valuation, his net worth could shoot up to around $630 billion, a level we've never seen before. And he's not alone in this story. Early investors include giants like Google and names like Peter Thiel. There's serious capital already behind this. But the big question is this: is a $1.5 trillion valuation actually rational? If we just look at rockets and Starlink subscribers, the answer would probably be no. Launch services and satellite internet, even at scale, don't fully justify that number. Their multiples are high, but not that high. What pushes the valuation into another dimension is a much bigger vision: moving AI data centers off Earth and into orbit. Why does that matter? Because on Earth, data centers are running straight into a wall. Energy is expensive. Land is expensive. Cooling uses enormous amounts of water. Local communities often protest new facilities. Grid capacity is limited, and build-outs are slow. In the US, the wait time for new gas turbines, one of the quickest ways to add power capacity, has stretched to years. Big tech CEOs are openly saying it. Without new energy, they can't build new data centers. And without data centers, AI growth hits a ceiling. Space offers an almost sci-fi, but very real alternative. If you place satellites into the right orbit, they can sit in constant sunlight, 24/7. That means virtually free energy from solar. Minimal need for giant battery systems. No night/day cycle disruptions. Space is also cold. That sounds perfect for cooling, but it's not that simple. There's no air, so you can't use airflow like on Earth. The solution being explored is liquid cooling with massive radiators, often using something like liquid ammonia circulating around hot components and dumping heat into the vacuum of space. A startup called StarCloud is already testing this. With help from NVIDIA, they launched the first experimental AI chip, an H200, into space on a SpaceX rocket to see how it behaves in orbit. Communication is another big advantage. On Earth, we use fiber optic cables to move data. Fiber is basically glass inside a protective layer, using light to transmit information. In space, you don't need physical cables. You can use laser links between satellites. Those laser interconnects can, in theory, surpass fiber in latency and bandwidth over long distances. They can also be used to beam data down to Earth. Right now, systems like Starlink typically use radio frequencies to connect to ground terminals. For future high-density AI workloads, laser downlinks may become more important. If this works, here's what you get: AI models running in orbit, powered by endless solar energy. Little or no water consumption. Lower operating costs over time. Potentially lower latency to end users, especially with smart satellite placement. A way around Earth's growing power bottleneck. Of course, it's not all upside. There are serious challenges. Cosmic radiation can corrupt memory and damage GPUs. That's why companies are working on special radiation-hardened enclosures. Maintenance is hard. Cooling systems and hardware eventually fail. You can't just send a technician in a van. You need robotic maintenance systems, possibly humanoid robots or specialized space bots. Space debris and traffic become bigger issues as more hardware goes up. Regulation and ownership questions loom large. Who owns what? Who controls the lasers? How do you manage interference? But the financial incentives are massive. If AI demand keeps exploding and Earth's energy constraints keep tightening, any workable solution that breaks that bottleneck could be worth staggering amounts of money. In that context, SpaceX looks very different. It's not just a launch provider or a satellite internet company. It's shaping up as the backbone of low-cost orbital logistics, the operator of the largest satellite constellation on Earth, and potentially the infrastructure layer for off-planet AI. That's the kind of story markets are willing to pay extreme multiples for. There are other players in the space AI race too. StarCloud is one of the most visible startups in this area, backed by major names. Big tech, Microsoft, Google, OpenAI, and others are watching closely and in some cases actively exploring similar ideas because they all share the same problem: energy and data center constraints on Earth. While SpaceX itself is still private, there are a few indirect ways this story spills over into public markets. One example is EchoStar, ticker SATS. Last year, EchoStar sold part of its radio spectrum rights to SpaceX, and in return also took an equity stake in the company. Today, EchoStar is estimated to hold around $8 billion worth of SpaceX shares, while its own market cap is somewhere in the mid-20s billions. That gap is one reason why the stock has jumped sharply on SpaceX news. The flip side, EchoStar's underlying business is not very exciting. Its revenue growth is weak, and it has posted large losses. So it's a high-risk way to get exposure. Another vehicle is the DXYZ ETF. It's a very volatile fund that holds stakes in high-growth, often still private tech firms. Companies like SpaceX, Stripe, and others that retail investors normally can't touch directly. Performance has been rough and the ETF is risky, but it's one of the few routes to indirect SpaceX exposure. Then there's Rocket Lab, or KLB. Rocket Lab operates smaller rockets, focusing on delivering payloads to lower orbits. It's not just a launcher. It also offers satellite design, on-orbit services, and other space-related infrastructure. As the space economy grows, especially if more companies start putting hardware and compute into orbit, Rocket Lab stands to benefit as a second major U.S. player after SpaceX. Its valuation is also high relative to sales, and the stock is volatile, but long-term believers in space infrastructure often keep an eye on it. Behind all of this sits an even more ambitious idea: Mars. SpaceX's long-term goal is to build a self-sustaining city of about 1 million people on Mars. The plan includes sending multiple uncrewed Starship missions in the second half of this decade, improving landing success rates, and then gradually moving to crewed missions in the 2030s. It's extremely hard to price this into a valuation model. There's no clear cash flow yet. Maybe asteroid mining, maybe ultra-luxury colonist tickets, maybe something else entirely. But as a narrative, it adds another layer of option value on top of everything else. When you stack it all together, the picture becomes clearer. This isn't just a company launching rockets. It's rebuilding global launch infrastructure, operating a giant satellite internet network, positioning itself to host AI data centers in space, and pursuing multi-planetary ambitions. That's why traditional valuation metrics struggle to keep up. That's why a price-to-sales multiple north of 60 doesn't immediately scare off every investor. For some, this isn't a normal stock. It's a long-term bet on the future architecture of civilization. If the IPO really happens at the scale being discussed, it won't just be a new ticker symbol on an exchange. It will be a stress test for how much the market is willing to pay for a single company sitting at the intersection of space, AI, energy, and communications. And if AI truly moves into orbit, powered almost for free by the sun, cooled by the vacuum of space, connected by lasers, then medicine, science, and technology could accelerate in ways that are hard to even imagine today. That's why this potential IPO isn't just big. It has a real chance to become one of the most talked about financial events in history.